And in our top business story, Dubai Holding Commercial Operations Group recorded a 25% increase in net profit to 5.83 billion dirhams last year, while revenues grew by 15% to 14.53 billion. Mohammed Abdullah Al-Gagawi, the chairman of Dubai Holding, made the announcement, adding that this growth was supported by the strong performance of its business units, the T-Com Group, Jumeirah Group and Dubai Properties Group, as the company is targeting an annual profit of 10 billion dirhams in 4 years' time. At the end of 2015, T-Com launched In5 Media, which is a new incubator building for startups, as well as the Dubai Science Park. The number of registered companies at T-Com Group's business parks increased by 11%, crossing 5,100 companies, with more than 76,000 creative workers by the end of 2015. Jumeirah Group signed 4 management agreements for hotels in Dubai, Abu Dhabi and Malaysia, as well as a partnership with Google to launch Jumeirah Inside, which is a virtual hotel tour. During the year, Dubai Properties Group signed an agreement with the RTA to develop roads to the Arjan, Majan and Liwan developments. DPG also signed an agreement with DEWA to build 6 substations worth around 700 million dirhams to generate power for DPG developments. In 2015, Dubai Properties Group launched 3 new real estate projects and successfully handed over more than 800 residential units. The company's residential leasing portfolio of over 15,000 units saw 98% occupancy and staff accommodation units at 100%. Average occupancy for retail units hit 83% and 100% for commercial units. And RAK Ceramics recorded a net profit of 310.3 million dirhams last year. That's an increase of 10.2%. The Board of Directors approved a cash dividend of 30% payout to its shareholders, as well as a stock dividend of 5%. A total of 305 million dirhams was primarily spent on expanding core businesses, which was up by 85% from 2014 and was the largest capital expenditure ever made in the core business. RAK Ceramics also acquired 100% of its subsidiaries in Iran and India and began the process of acquiring its European subsidiaries. Sales in the UAE and Saudi Arabia increased in 2015, with the UAE registering an increase in revenues of 7.8% and Saudi Arabia by 11.5%. RAK Ceramics' core markets are expected to continue their growth momentum in 2016, led by the GCC, South Asia and Europe. The Dubai Airport Free Zone Authority announced a 23% increase in the number of Indian companies operating within its premises last year. Official statistics reveal that India came first in the list of Dafza investors by country last year, accounting for 38% of total Asia-Pacific investments. The investments of Indian companies, 45% of which are multinational, focus on the electronics and communications sectors, which ranked first at 25%, followed by the computer, internet and IT solutions sector at 14%, and then jewellery, watches and precious stones at 9%. Indian human resources comprise of around 34% of Dafza's total workforce and of the regional, international and multinational companies working in the free zone. A spokesperson stated that the Free Zone aims to deliver an integrated portfolio of facilities in order to encourage Indian companies in the UAE's ongoing development and investment projects, which attracted Indian investments of 59 billion dirhams over the past year. Demand for industrial property in Dubai is currently outperforming housing and office sectors, according to the latest report. Dubai-based real estate firm Core Savills found that industrial rents were broadly stable across most of the established industrial areas in Dubai throughout last year, while some of the newer parks, such as Dubai South, Dubai Investment Park and Dubai Industrial City, reported rental growth. The report added that sales prices of industrial land and buildings in newer areas held steady, but increased in older districts such as Al Quoz, Al Qusais and Ras Al Khor due to a lack of supply. According to Savills, about a third of total demand for space came from the logistics sector, whose market value was expected to reach $25 billion by the end of last year. Other major demand drivers have been for light and medium-scale manufacturing units and for storage space from the construction and retail sectors. The chief executive of Core Savills Dubai, David Godchaux, was quoted saying that despite continuing concerns over low oil prices and general economic uncertainty, the industrial market in Dubai is proving to be resilient. With no shortage of quality supply, relatively strong demand and good infrastructure put in place, Dubai is a market that cannot be overlooked by investors. Dubai's residential sector experienced price declines of 11% last year, and further falls are expected this year as more supply is delivered into a subdued market.